on to our segment where we talk about the stock of the day, but we give it to you from both sides of the story. So today, Jubilant Ingrevia is in focus. It's zooming on the back of a block deal, nearly 15% up now, and it's believed that the promoter families and the promoter entities could be selling these blocks. Why is it then zooming, and what is the bull case, what's the bear case? We're speaking to Varsha about this now.
Yeah, thank you so much for that. As you rightly said, the stock is buzzing on the back of block deals that the company has seen. But you know, over the longer horizon, what is actually working for the company? One is they've set a clear target. They want to triple their revenue to 12,000 crore and want to take their profit to almost 4 times from what they are today, that is to 4,000 crore by FY30. Now this will be driven by high margin specialty products and also new ventures that they are entering into, that is semiconductors. But on the bear case, though they have set a I would say aggressive target, this requires flawless execution plan by the company, number one, and the complex field like semiconductors, meeting those targets when you are into this complex sectors may be difficult for the company, and this targets may be challenging for the company. But moving on, the other thing that is actually working for the company, where I would talk about the bull case, the company is strategically shifting its business mix towards high growth, high margin products, that is specialty chemicals, targeting 60% of revenue from high margin products, specifically in the CDMO and fine chemical space, including the newer or sunrise sectors like semiconductors. But intense competition, especially from the Chinese peers, from especially in the commodity chemical space, and also potential price war could actually impact the margins that they want to target. But you know, they boast that they have a global market share when it comes to biopyridine, and they are number 2 when it comes to vitamin B3. Cost leadership will actually allow cost leadership will help them to achieve that margin, and operating leverage will also help them to grow faster, and a diversified portfolio will actually support the growth that they are eyeing into. But and lastly, if the ambitious export target that they've set, that is 65% of revenue from export that they are eyeing by FY30, makes the company vulnerable when it comes to geopolitical shifts and trade wars, such as unpredictable tariffs war that we are seeing. But so overall, if you see a good aggressive target that the company has seen, rather the company has set up for the next 3 to 5 years, but competitive pressures from Chinese products and of course the geopolitical pressure that the company is seeing, and the overall pressure in the chemical industry will make them hard to achieve those challenges.